Gavin, thanks very much indeed for joining us. Well, you got a snapshot of this data. What do you make of it?
Yeah, quite disappointing, the retail sales numbers, although building approvals were stronger. I think one of the hallmarks of the Australian economy since the recovery started after the global financial crisis has been the fact that the consumer has been cautious. And so I suppose this data continues that trend.
Gavin, I'm just going to correct myself just with these numbers here. March building approvals up 9.1% in February, estimates that to gain 5%. So just that at the moment as well. But what does it actually highlight? Does it highlight this so-called two-speed economy that Australia does have now?
Absolutely. Look, the mining sector, for obvious reasons, is doing very well. The RBA, unfortunately, has very little control over the mining sector. So what it unfortunately has to do is hike interest rates to make room for those mining investment projects and cooling down other parts of the Australian economy. And unfortunately, the Australian household is one of those sectors that is feeling the brunt of the RBA rate hike cycle.
Do you think things are going to get worse before they get better with regard to the economy, especially when it comes, as you point out, to the household side of things?
Well, I think that's a natural progression to think that, because at the end of the day, commodity prices are showing no signs of really rolling over, although they've had a little bit of weakness over the last couple of days. But I think commodity prices appear to be heading still higher, and that largely comes down to the fact that global central banks remain extremely accommodative with their policy, in particular the Fed. Until the Fed starts tightening policy, reducing liquidity, commodity prices are going to go up. That's going to create inflationary pressures here in Australia, and the Reserve Bank, unfortunately, is going to have to try and cool down those other parts of the economy.
Right, well, we perhaps see an end in sight as far as quantitative easing goes. Fairly shortly that should be happening. Will it have an immediate impact, or do you think that's already built in? And we've seen with the chase for yield how the Aussie dollar's appreciated so much. When it hit 110, it's now down to 107. It's got to hurt.
Oh, absolutely. Look, I think when it comes to the Australian dollar, net, I think it's a benefit for the RBA because it's trying to fight inflation. Of course, certain sectors are going to do it tough: tourism, manufacturing, education. But I think that's an unfortunate byproduct of the fact that commodity prices and the mining sector are doing so well. So until the Fed wants to start tightening, and that still seems to be a 2012 scenario, and the RBA wants to sort of take its foot off the brake, I think the Australian dollar appears to be destined to go higher, despite this little bit of a pullback we're seeing at the moment.
Gavin, just walk us through also the other side of things there with the commodity story. How does the average person feel about okay, I can't borrow money cheaply, but at the same time my country's getting richer, and I'm not really getting a taste of that to some extent?
Oh, you raise a very interesting point, because in the commodity boom #1, the one we had before the global financial crisis, Australian households obviously faced higher interest rates as well. However, at that point in time, we were actually getting tax cuts. And so you get a little bit of a tax cut and you feel as though, well, OK, I'm getting my slice of the pie. This time around, of course, we haven't had the tax cuts, but we've had higher interest rates. So, yes, you are, I suppose, raising an interesting point. The bottom line, however, is that everyone's employed. I suppose that's a positive, but, people are feeling the pinch.
Gavin, great to see you as ever. Gavin Stacey there from Barclays Capital. He's a rate strategist for Australia and New Zealand.